Definitely a surprise coming in at 8.2%, 9-quarter high rather. In fact, if you look at the July core sector data, that also has been fairly impressive. We're seeing that coal, steel, cement, refinery products is fairly strong in the core sector data. So all these are definitely pointing out that the growth remains fairly healthy in the economy. In terms of the Q1 GDP, there is of course a factor of a favorable base, but there is a beat in terms of the agriculture as well as the industry GVA data. In fact, a lot of the entire growth is being led by both agri as well as industry. Services growth has come slightly slower. In terms of the industry, manufacturing, electricity as well as construction GVA have been fairly strong. We were expecting that a high or a healthy cement as well as a steel production is definitely aiding the overall construction growth. If you look at the gross fixed capital formation, that has been at higher double digits for a second quarter in a row. I'm not too sure if it can be sustained or not. Exports as of now at least is strong, but given the global turmoil, we really need to be mindful of that export growth there. Having said that, although so far we are showing signs of good growth, RBI also mentions that lead indicators in terms of services are also pointing out to a recovery. Can it be sustained is a question. Most of the economists are believing that second half we may see slower growth on account of high interest rates and also on account of this being an election year. But we also need to be mindful of oil as well as rupee depreciation and trade wars. I guess these three factors may also need to be fairly watched out for a sustained growth recovery. But as of now, a beat in terms of the GDP, it is at a 9-quarter high.